It's a little bit better. A little, yeah. I can see the roads generally. So I'm not in a high traffic. I can't imagine riding my bike in New York or LA or something like that. That does not sound like a good time. But here in Reno, it's usually
No.
pretty good. And like I said, go in the mornings. It's not too bad.
Hmm. Oh, listen, I lived in New York and now in LA, I have a pair of bikes, which a trek, nothing fancy, like $500 at best. And yeah, no, I'm too scared to drive them, to ride them, even just putting them in the car and then to the beach, and it's like too much work. I'll just run. No, should people follow you on Strava? Are you doing like special routes or
I am on Strava. Yeah,
in
I
your
just
zone?
got into Strava. Yeah, so I got into road biking. I mean, I'm not that good at it, but I got into a couple years ago, kind of the end of COVID, as something to do and just get out a little bit. And so, but yeah, got on Strava and have a lot of fun with that. And it's like Facebook for exercise. I guess I don't know. It's a fun app.
It is. So people, if you're not familiar, if you are, riding bikes, running, whatever other stuff, we are on Strava. There is an initiator group on Strava with all kinds of weird people like myself, or,
Is there
well, now
really?
I'm
I need
not
to get on
trying.
there.
Yes, yes, yeah, yeah. I don't remember who
I didn't
started
even know
it,
there was a
but,
group on there. I'll have to find it.
and somehow we got Nigel Wash involved there as well. But the joke about it that he's on Peloton, so he doesn't really move. So he publishes, hey, I did this course or this class. And you're like, and here's the map of my 20 something kilometers. It's
just
like,
a,
I did a
just a dot, just
smiley.
one dot.
And he's like, I was here and I did a super cool class. Okay, I'm digressing. Let's talk about you. Actually, let's talk about Talage, if you don't mind, right?
Yeah,
Because this is why
yeah.
we came. Well, I'm from a hotel. Otherwise, I'll never have other episodes because I've been traveling a little bit too much. What's Talage, and why you guys amazing?
Yeah. So we are amazing. So Talage is it's a submission management platform, and so kind of our niche in the world where we want to kind of live with all the other insurtechs and the incumbent insurance carriers is we really want to own that submission process, and so kind of taking an application from the business owner, taking it through an agency, and delivering it back to the carrier, and kind of bringing that cycle back down. So it involves obviously, we've integrated a lot of different APIs from the carrier standpoint, so we can deliver instant quoting, we can deliver multiple coverages, multiple carriers, kind of that single entry, multiple quoting system. We've got tools to do OCR reading to read quote applications. We can bulk upload. We can handle renewal books. We can handle book rolls. All the things that kind of go into that submission lifecycle is really where we want to live. And so, we kind of see ourselves playing very well with the agency management platforms, with the insurance carriers. Obviously, is a huge partner of ours, and we see ourselves in an extension of what they're trying to accomplish. And then at the core of it is it's agencies and brokerages. And so whether it's wholesale brokers or retail agencies, anyone looking to kind of streamline that submission process is really what the Talage platform does. And we've got our wheelhouse platform, which is kind of our UI that we've built around our API with lots of tools in that. And then we have a headless API. And so we've got a couple of insurtech partners now that built their own user interface or building their own tools and are just using our connectivity into the carriers to enhance what they've built. And so, really excited about where the market's going. I think, we've been wanting it to get here for a long time, and it took maybe longer than we all thought it was going to from an industry standpoint in terms of how fast some of these things move. There's a handful of insurtechs who aren't here anymore who could tell you they thought it was going to move a lot faster too, right? So grateful to still be here. Grateful to be picking up more partners. It's a tough business, right? It's a slow industry. It's a big one. It's and I'm grateful every day that we're still here, right? We've gotten lucky on a handful of things. I think we've made a couple right choices, whether we meant to or not at the time, I don't know, but we ended up on the right side of things. And so, yeah, excited to still be here, excited to be building, and excited that over the last 6, 9 months. It really feels like the industry has kind of understood what we're trying to accomplish, and it's been a little bit frustrating for me because it's kind of like they're like, oh, that's what you want to do. It's like, that's what I've been saying for 5 years. But anyway, they're finally getting it now, so we'll take it, and excited about where this whole thing's headed.
So it took 5 years. And so do you think that during COVID there was that aha moment that they need to shift more to online to streamline those quoting? Or was it a cry from the agents who were like, I have all these insurtechs there that competing with me, they can do that, and I still need to play golf or whatever on almost nothing in terms of the ROI. Well, the golf is for the bigger
Yeah,
clients, but
there's
you know,
oh, of course, of course, of course. No, I think there's a lot of things. I mean, COVID was interesting, right? Because I think in a lot of ways it did speed up the mentality, right? Like I think the insurance industry
mhm.
kind of took a step back and said, well, we got to do something better. Right? Like this becomes normal. We've got to change something. And I think kind of the hearts and minds happened really, really quickly. But then because it's insurance, a lot of those things didn't actually happen that fast, right? People wanted them to happen fast, but then you got to get through procurement, and you got to get through processes, and you got to get through multiple layers of gatekeepers at all different
Yep,
levels in the organization. And so I think COVID was helpful, if you can say that, in moving the
it
industry
was.
forward from a
Hmm.
mental standpoint. But really, over the last year, I think past COVID, I think people are starting to recognize that the COVID, we're not. There are a lot of things about COVID that better or worse, are going to stay with us for a while, right? In terms of being more flexible with work schedules and where you're working from, and all those different kind of things. I think are some positives that we can take from COVID, and I think those aren't going anywhere. And so we're seeing more adoption based on that, and it's also just I think as the insurtech industry has matured, you're seeing some of the carrier partners, especially right when they're looking at their integration. I think when you look at the integration side of things, they're looking at all these integrations. They're going, okay, well, we've got integrations with a lot of good friends. We've got integrations with Semsi, and we've got integrations with Talage, and we've got integrations with Bull Penguin, and we've got integrations with whoever you've got integrations with. At some point they kind of reach this breaking point where they go, okay, well, we can handle 5 integrations, but can we handle 50 integrations? Can we handle 500 integrations, right? And so I think now we're starting to see the carriers go, okay, well, we can handle 5, maybe we can handle 50, but we definitely can't handle 500, right? And so they're trying to figure out how to, distribute that a little bit better, be more efficient with their own resources, and that's where I think we're seeing a ton of opportunity right now is kind of partnering with the carriers. So.
And I think this is the same value proposition that I used to offer when Bound API was still up and around, which was all about
Mm-hmm.
you can
Yeah,
have, you can work with that agency, sorry, digital agency, you can work with that, you can work with that. Now you on the business side, bring your IT partner, can they handle it? How many project managers,
yeah,
how many architects or hands-on developers who will manage all of these partnerships and the technology and will be up to date? Can they even handle it? Do you have in your organization, or are you
yeah,
going to throw it on various consulting companies that I will not name names now, but they basically sort of running IT slash outsource IT for most of the bigger insurance company? Because let's face it, how many engineers go like, you know, I thought about Google, but I will try to go to that insurance company.
yeah.
Yeah, that will be the bigger challenge as an engineer. I'm sorry
It
for
is.
being
It's
sarcastic,
a real
but that's
challenge, and I
part of the
remember.
reality.
No, you're absolutely right. I remember talking with you about Bound API, I mean, years ago at this point, right? And some of the challenges you were trying to solve, and we were looking at, some. I think we were coming at it from a little different way, but I think we were looking at a lot of the same problems. And I think where you were probably ahead of the curve is because you were at that point where they had 5 integrations, right? And they're going, well, we can handle 5. But then all of a sudden, now they get to 10, now they're at 20, now they're at 50, and now you kind of run into this problem where they're starting to recognize exactly what you're saying is they're an insurance company. They don't want to have 40 developers on staff. They don't want to have they can't recruit those developers. Exactly your point. Like I know you're being sarcastic, but you're not wrong. Recruiting developers out of big tech companies to come work for an insurance company or agency or brokerage or whoever, it's tough. And so I think the insurtechs have a little bit of an advantage, right? Because we get to be hip and cool and be an insurtech a little bit. But even for us, it's it's hard to find good engineering staff and rope them into the insurance industry. And so when we find them, we do everything we can to keep them, frankly.
Yeah. And by the way, having said that, I am very, very proud of the engineering culture and teams that I built when I was with farmers. Most of them graduated and are working for the big tech companies and other startups. So,
Yep.
I left farmers about 4, maybe 5 years ago, but on LinkedIn, I see, oh, that guy is now with Microsoft and that guy is now with
Very cool.
Twitter. And I was like, holy shit, we've done something great, giving, recognizing potential as an insurance company and giving those engineers opportunity to go. So that was a little bit of Kodus and shout out and all that stuff. Now let's go back to Talage. Okay. So, we talk Talage. Let's talk about Adam. How did you end up in insurance? What's your background, man?
So I, like everybody in insurance, right, grew up as a little boy dreaming of being in the insurance industry and working in insurance, right, as a 5-year-old child. So, but, no, actually, like everybody else, I got here probably by accident. Most people get here by accident.
Mm-hmm.
So played college football up at the University of Nevada, and it was my dream to kind of play in the NFL and be a professional athlete and be retired by now, and sitting on a yacht with a bunch of Super Bowl rings, and that didn't quite pan out for me, and so had to get a real job. Was 23 years old, done with school, and needed to get a real 22 years old, I guess. Needed to get a real job, and had some connections. Somebody knew an insurance agency in Reno, Nevada. Really strong local regional player. And so got an interview with them. They liked me enough to kind of bring me on board as just a junior sales guy. I was literally making cold calls and hitting the street and selling small commercial policies and little BOP policies. And that agency actually got acquired by ABD Insurance. So worked for ABD Insurance, which obviously is now kind of through multiple iterations is now part of the New Front organization, which has been awesome to watch them kind of evolve. And then then ABD was actually at the time was acquired by Wells Fargo. So worked for Wells Fargo Insurance. Obviously, I think at the time they're one of the biggest insurance agencies in the country, and so really kind of worked with them on the small business segment. And they were trying to roll things up, trying to aggregate things into a small business call center up in Minneapolis. Went wrong for lots of reasons related to Wells Fargo, but I always thought, like, even as a kid, kind of working through this and kind of helping with that process, like, there was efficiencies to be gained in the small commercial space, right? Like the way Wells was doing it, I thought was wrong, but the idea was right? Like, and their execution was poor, but the strategy was there. And so that's really kind of where the idea of Talage kind of originally came from, was like this simple idea of like do small business better, right? And so then had the opportunity to move to the carrier side, worked for Employers Insurance, kind of ran the Nevada territory for them, and then did well, fortunately, got promoted, ran the whole Western region for them. And it was kind of there where kind of the rest of the pieces kind of came in, this kind of nugget of do small business better. But when I was working for Employers was, at the time, and still are very much so, kind of leading, the charge from the technology standpoint in terms of kind of their back end underwriting systems and things like that they had done. And, was kind of seeing some of these things play out. And I remember going to like big sales meeting, and they're all fired up about predictive analytics and all this stuff that they're putting in the back end. And then you go out into the field with the agents, and the agents are like, I don't care. Like, that doesn't affect my life at all. Right. And I was like, okay, well, then how do we make that affect their life? And so, without just building more portals, and it was kind of the API, right? Like, and opening up those quoting engines and putting them more places and being where the agents are and being where the business owners are. And so, it's kind of the experience of Wells Fargo, kind of seeing from the agency side, trying to make this more efficient, the headaches that came there. And then my experience with Employers was really what kind of capped, kind of the thesis of Talage was there is technology on the carrier side. We're just not efficiently as an industry kind of pushing it down through to the policyholders and to the agencies. And so that's really what we're trying to do. And so we try to take that tech, trying to make it easier to be an agent, be a broker, make it more efficient, hopefully help the margins on their books and save them a lot of time in what they're trying to accomplish.
Super cool. And let's give a little bit of shout out to my main guy, Michael Lebor, and his work. And you guys are working together and trying to automate and make the world a better place. So we'll give him the shout out for.
Awesome. No, Michael Lebor has been a fantastic partner, and when he was back at Amtrust,
Trust. Yeah,
I mean, he helped kind of like lay the foundation for what we had done at Amtrust, and now what he's doing at Insurance Gig, I think is fantastic, and we're excited to be partnering with him on a lot of different things. I think it's a big vision, but if anyone can do it, it's Michael. So
most
excited to be
definitely.
partnering with him on a lot of things.
Yeah, most definitely on that on that part. The guy has more, yes, the he's what I usually I make fun of it a little bit, I call it Michael's party trick, the QR code, the connection. And I've seen it, people using
Yeah,
it
yeah,
in, let's call it, in the world, they're actually using it. But you see him in a conference,
yep, yep.
energy, give me your phone, let me show you how you do that. And we were talking to a certain LA-based investor, and we met, and the guy's like, "Oh, here is my phone." And then he looks at Michael, while Michael is driving, and looks at me, and he was like, "I never give my phone to anyone." It was just, yeah.
You can't say
So
no to Michael. I mean, Michael's almost impossible to say no to. So.
yeah, okay. Enough about Michael. Any other super exciting partnerships that you've done recently? And especially when I think about agencies and all those stuff, immediately I think about the policy admin, the
Yep.
AMSs,
Yep.
the agency management. Yeah, I'm sorry. The mic is yours.
No, I mean, you're absolutely right, right? I mean, when you look at an agency, whether it's, a little small agency that, in Reno, Nevada down the street, right? Or if it's, a big wholesale brokerage across the country, kind of that core system that drives everything they do is that agency management platform. And obviously there's a lot of big competitors in that space doing some cool things, but we're really excited because, we also recognize that kind of the submission piece that we really want to own and kind of be the submission management system for them, and kind of own that part of the life cycle. Like, it runs parallel to everything else they do, right? Like, they've got their agency management that's running the policies, it's handling renewals, it's handling contacts, it's handling certificates, it's doing the accounting, right? I mean, most of them are running the accounting systems right out of those things too.
Mm-hmm.
And so really kind of the submission management platform side of it really runs parallel to that. And what we're really excited about now is actually with Insurance Gig, on some of these, actually working with the agency management platforms. And so with Insurance Gig, we're working with Hawksoft to actually integrate into the Hawksoft platform so that Hawksoft agencies can actually access some of the tools that Wheelhouse has built, that Talage has built, through our Wheelhouse platform, and those APIs, we can actually drag the quoting right back into the agency management system. We're working with, I think we've sort of announced it. We'll do a bigger announcement when it actually goes live. But working with Nexture and X Dimensional on, it's a great platform, especially for wholesale brokers and things like that, where we can actually kind of work into their workflows, where we can set automated timers where, Nexture will send us a renewal 90 days before the renewal, happens. We can take all the policy information from all the endorsements and everything they've done over the course of the year. We can run it through the Talage quoting platform and drop that back into the Nexture platform without having this kind of portal fatigue, right? Every insurtech has come up with their own portal, and we're guilty of
Yeah,
it too. We have one that we're very proud of, but from an agency's perspective, how many portals are you going to log into during the course of a day, right? Like, and we
40.
recognize that, the tons of them, right? And the agency management is that's the sun in the agent's, solar system, right? And we're very happy to be the moon, right? Like, I have no problem being the moon. And we can live right next to that and kind of, play second fiddle to that agency management system. But I think we can bring a lot of value to the agencies and to the agency management systems themselves, where we can bring this connectivity, we can bring the carriers in there, we can bring some of our tools that we've got in terms of, the automated workflows and, sending digital storefronts that are customer facing out to business owners, right? And enable these agencies to really do business like it's 2022, and but keep the agent in the cycle, right? Like, we've always thought it was really important to keep the agent kind of core to everything. And so, while there's obviously been some really big insurtechs that have kind of gone that direct route, like, we've always kind of doubled down on making it better for the agencies and make it easier to sell insurance, and really kind of drive tools where, you as an agent can text a half completed or 75% completed application to a prospect because you found half the information online. You went and had lunch with somebody, or you went golfing, right? And you picked
Yeah.
up some information, but you didn't know, I don't know the payroll, but I knew you're a plumber, right? Or whatever it is, right? Like you can send that out there, give them kind of that customized experience. And so we're really excited about the agency management system partnerships. We really think that's kind of the future is getting deeper with these guys. And obviously there's a couple big players in that agency management space, but there's a lot of players in the space, more than people think. I think more than people recognize. I think, and so we're excited about that, and that's really kind of where we're headed. The rest of this year is doubling down on those agency management systems, getting those integrations done, where it really becomes a seamless cycle back and forth between Talage and the agency management system, and ultimately the agents. Right?
Yeah, no, listen, it's amazing that in one end, when we start the conversation, it's like, okay, Talage, we have it's all about streaming the submissions and all that stuff. So you think about, okay, so you're an infrastructure, you're a pipeline, not a pipeline, and you are doing most of the work integrating with the insurance companies, working with their APIs, if they have an APIs, or with the rating system, quoting system, whatever that may be. And then actually, which
Yep.
in a sense, are they your paying customers, or are they the agents the paying customers? Who are the paying
So
customers?
the way we've kind of structured it is, so paying customers is actually kind of both. And so the way we've kind of structured the system, and we've done it this way on purpose, is we wanted to be accessible to everybody, right? Like, so we don't have to charge the agencies tens of thousands of dollars. We charge them kind of a software fee to kind of run it, keep the power going, and then we partner with our carriers. And so generally our carriers are paying us some kind of override, something like that, to actually run this thing for them. And so the idea is we don't have to charge either one of them an exorbitant amount of money. We can be kind of seen as a partner to both sides, right? And so, the business model is essentially, the agencies, the brokerages pay a little bit to kind of run the software and help with their workflows and things like that, and then the carriers pay a little bit to help us, or for us to help them distribute their product for them.
Gotcha. Okay, so I'll continue my example, which is you do the heavy lifting, you have the interact, then you actually all of the conversation so far, it wasn't about the insurance companies. It was actually on the agents on the other side, which is let's give them love, let's give them the technology, the way that they can actually sell. Which at the end of the day, that's what the carrier wants. They don't really care about IT. Only people in IT care about IT. But what they do care is about sales, and can we make sure that the agents can sell our product, right? If the
Yep.
right.
Yep. And that's and that's where we really see ourselves as partners, or the carriers are really our partners, right? We don't have carriers, we don't have anything, right? Like this whole thing falls apart really quickly if tomorrow all our carriers tell us they don't want to work with us, right? That would be a problem. And so what we do is really we want to be an extension of them, and so exactly your point is we make sure that they're with the right agencies. And then what we do kind of in exchange for the fees that they pay to be on the system is we give them that data, right? Like, so we allow them to see kind of where they stand in the marketplace. And so kind of for the first time, really in an aggregated, this data has always existed, but really in an aggregated way, a carrier can log into our platform. They can see what's happening kind of globally on Talage, across the entire platform, and they can go, okay, with wholesale agencies, with retail agencies, with whoever, we're having this type of hit ratio when, and we, of course, all this data is anonymized and aggregated and all those different things for antitrust issues and things like that. But, if you're XYZ carrier, you can go in there and you can say, okay, versus the field on plumbers in Southern California, I'm winning 75% of the time. And when I win, I'm winning on an average of 25%. My premium is 25% lower than the average competitor. Or when I lose, my premium is 10% higher than the average competitor, right? Like, and so we aggregate all that, we average it. And so really as a carrier, you can log in there and kind of see kind of front end, almost proactive kind of actuarial data, not just based on losses, but you can actually see pricing in real time in the market. And it's live. You can see what happened this morning, right? So you can see anything that's happening there. And so the carriers, I think, are really starting to appreciate the data components of this. And I think that's kind of probably the sleeping giant in the insurtech world. And it's not, I don't think it's a well-kept secret, but I think it's just as more and more things kind of run through these APIs, as more things are distributed digitally, this well of data just becomes bigger and bigger and bigger. And as that becomes, reaches kind of this tipping point, it becomes immensely valuable to the carriers, right? They can understand how they do business. They can change things on the fly. They can I remember when I was working for employers, we used to go down and like we'd be out in the field and we'd be beating up agents and we're like, hey, we need you to write more, plumbers. And they're like, well, your plumbing pricing is terrible, right? Like, but like if we could give employers the insight to go like, hey, maybe you want to write more plumbers, fine, but your pricing is 50% more expensive than the rest of the market. Like you got to either change your pricing, or change your approach, change something, right? But at least give you the insight. Or you can say, look, at 50% more expensive, like our loss ratios can't sustain we can't drop our price by that much. We're not going to pick up that much in a credit. So like, okay, well then stop trying to chase plumbers. Maybe you don't actually want plumbers, right? So I think that's where we can kind of give them data back and make them make better decisions. And we obviously make no decisions for them. All we do is we give them back the data and say, hey, this is what we're seeing. That's obviously from their point, they can do with that what they want. We just want to be able to arm them with the data to make a rational decision. And so I think that's where we're starting to see the traction. And those are the things that take time, right? Because it's, I could give you policy, data on 100 policies. Maybe that's interesting, sort of, right? But like you need data on 10,000 policies, right? And so that's where it just takes time of kind of this groundswell that has to happen so that you can get enough flow, you can get enough policies, you get enough data where the carriers really are kind of driven by the information that they can glean from it.
And we know that data is gold, and insurance companies love it because they need it. And usually what they're looking for is some sort of industry benchmarking because they know what they have inside their own company. Yep. So let's take the plumbing example. Just let's do a quick under the hood kind of thing. So in order to go, you as employer or any other insurance company, you need to go to your distribution channel, in this case, the agents, and tell them, we need that you'll write more plumbers, right? More of that type of a class risk. And now most people go like, wait a second, how do you know that? So how do you go back from the actual to the guys from pricing if it's a big enough organization to have the different analysts that will actually get prices from the competitors, right? How does it work that you go like, looking at the risk and the risk compliant of it, blah, 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 we should have more plumbers. How do you reach that point?
I mean, most of the carriers, it's relatively simple, right? I mean, obviously, there's a sophistication here that I'm going to gloss right over. But, most of them sit there and they go, hey, on a plumber, like we're running a 50% loss ratio. Like, right? Like we have no losses on plumbers this year. Like this looks like a great business for us. We should write more of that because it's more profitable, right? Like, and so most of them are just really looking at that loss ratio of a plumber. And, I think there's pieces of that data when you look at something and I go, hey, you can write one policy that, for every dollar in premium is going to cost you 99 cents, or you can write another policy for every dollar in premium is going to cost you 50 cents. We're all going to take the one that costs 50 cents, right? Like that's better. We make 50 cents in profit on that. We're like, great. It's very, very simple math, right? But I think what it leaves out is a lot of these other data points where maybe the reason your loss ratio is so good because you're overpriced, right? Like, and the plumbers you have just, didn't shop around, I guess, right? Like, and there's a lot that are left out there that you're just overpriced on that. And so maybe that's why your loss ratio is so high. And so maybe there's a middle ground where, okay, well, maybe, that 50-cent one's not right, but if you can lower your pricing where you're running at a 75% loss ratio, maybe that's exactly where you want to be, right? And so I think some of the tools on the front end that allow the, because so much of what a carrier does is really kind of backwards looking, right? Like they're looking at last year's policies and 2 years ago's policies and 3 years ago's policies, right? And trying to understand what's happening. But the piece of the equation that they don't really have is like, well, what will the market sustain? What will the market hold? Yeah. And what I used to go out with agencies all the time. And it used to drive me crazy because we go, we'd sit there and we go, hey, this was as employers, and I'm sure they're still having these conversations. I know they are. I've talked to the people. They still have these conversations. They go, hey, how's our pricing look, right? Like, how do we look in the market? And the agent goes, well, you're high. And you go, oh, okay. Well, like, what, how are we? I get my notepad out, right? Like, well, how are we high? What are you seeing? Like, well, last week I put through this dry cleaner, and you guys were twice as expensive as Travelers. And it's like, okay, well, like, that's interesting, sort of, right? But it's not statistically relevant. It's really nothing we can do with that one little piece of data. Right? I'm
sorry to cut you off here,
and
because
so we had so many of those conversations.
This is mind blowing. It's like, so in order to get that feedback, and this is about pricing, not just about whatever underwriter is sitting there and thinking about, oh, this is the risk that we think, this is what we've seen historically in our company, maybe got a little bit of extra data from the other companies. That should be the pricing. That should be the price. Now, how do you get a real loop, a real feedback loop from your customer? And what you've done, it's okay, it's that's the best way to do it, but how do you do that in scale? How do you, and I know it's less related to Talage, in just like a topic that very
Yeah.
interesting.
No,
How
no,
do you
no.
get the
Well, no. It's, I mean, totally agree, and whatever. Yeah, it's sort of related to Talage, but obviously it touches a lot of things, right? And so, obviously it's one of the problems we're trying to solve. But like that was the thing that's kind of crazy is even today, because a carrier can see, oh, and you kind of mentioned this, right? Like they can see what's inside their box, right? Like so you're a carrier and you go, hey, we quoted 100 plumbers this
Mhm.
month, and we know we wrote 30 of them, right? But they don't know what happened to the other 70, right? Like they know they wrote 30, so they can assume based on that their pricing was competitive. Whether it was the lowest or not doesn't really matter, but it was competitive enough to get those accounts. So like the 30 great. So, but now there's these 70 that are sitting there that they have no idea what happened to it. Like it, maybe it was a brand new business that just never actually ended up buying a policy. Like, okay. Maybe it was a business that went out of business. Okay. Maybe it was one that they were, outbid by, five different carriers that all have better pricing or better coverage or better whatever, but there's no real insight for the carriers from their perspective. So all they see is kind of what they have. And so what Talage can do and what other platforms who kind of uniquely sit where we sit is be able to go to them and say, look, I can tell you what happened to the other 70. And obviously, like I said, of course, I want to keep stressing this. We anonymize it and aggregate it, so you can't see. Like you can't go into Talent and go, "Oh, Travelers got it for $1,200 and I had it for $1,300." Right? Like you don't get
Yeah,
that level of granularity. But what you can see is that the field, on average, our pricing was competitive and we didn't get it. So like, okay, well, it have something to do with the coverage types? Did it have something to do with the endorsements? Did it have something to do with the payment options? Right? Like I don't know. Or you may go in there and you say, look, on average, this on average a plumber got 5 quotes and you wrote 30 of them, and on the 70 you didn't write, on average those other 4 quotes were on average 25% less expensive than you were. And so you can actually take a hard look at your own pricing and go, okay, there's probably issues where we could, or maybe you can't, but you can say, hey, like we're not writing more plumbers because our pricing's high. And then you can go back to actuary can go like, hey, look, our loss ratio on plumbers is too high, we can't take a cut there. And then you're okay with it, right? Or the other thing I think that no one has ever told an insurance carrier ever is that we can tell them they're too cheap, right? Like no one's ever done that in the history of insurance. I don't think has gone back to a carrier and said you're too cheap, right? Whereas our platform can actually go through there and say, look, let's go back to the plumbers, right? You quoted 100 plumbers, you wrote 80 of them. On the 80 that you wrote, on average, your pricing was 30% cheaper than the rest of the field. So then they can go, okay, we can actually raise our pricing 10%, increase our loss ratios, and still win those accounts, but we'll win them by 20% instead of winning them by 30%. And so I think this is kind of the data back and forth from a market standpoint, from a pricing standpoint. And obviously, this all has to be balanced internally with the carriers, with their own actuaries and their own loss results and everything else that has to go into that. But for the first time in a one single kind of aggregated location, a carrier can actually analyze the market conditions and the pricing on their book on a real time basis.
fantastic. Okay, we passed the 30 minutes mark, but so let me ask you the last question
Yeah.
that
You let me talk. You can't do that.
I'm
You can't
sorry.
give me
I'm
an open
sorry.
mic. So
Most of it is me making really bad jokes, so it's fine. Listen, there are
it's been a lot of fun.
sometimes, we get into podcasts that it's more than an hour, then I need to cut it, and it's too much of an overhead. So we try to keep it sweet and to the point and not start to talk about, whatever Joe Rogan and his gang are talking about, because we are not. We are still in insurance and trying to make this
We'll
specific
take it.
industry a
We'll
little
take it.
bit better. Do you have a
Perfect.
recommendation? It can be a life hack, a book, a show that you've seen recently.
Man. Well, so I just went back. I mean, this is an old one, but I recommend it highly if people haven't seen it. But Band of Brothers. So I went back and watched it on HBO. The Band of Brothers about World War II in Europe, which was fantastic. Kind of, the beaches of Normandy and that whole deal. And really, I mean, I think it's 15 years old at this point, but it was fantastic, really well done. And so, if you've gotten to the end of Netflix and you've watched everything out there, I would highly recommend going back a little bit and, and watching Band of Brothers. It was fantastic.
You know, Thank you for that. And it was interesting because so we are recording this episode July 20th, and I think yesterday or 2 days ago there was an interesting uh, move in the Netflix stock price. And what happened there? It's like it went up 8%, and people are like, "Holy shit, what happened?" And apparently they just lost 950,000 subscriptions, while the expectation was that they are going to lose about 2 million subscriptions. So it's like, hey, they lost less.
Yes.
We can, the value of this, the stock should go
It's
back up.
crazy, right?
But
you didn't do as bad as we thought you were. Like, price goes up.
yeah, you were not as bad. It's like, and if we are taking that, it, well, with Netflix is easier, right? You have number of subscription, you more or less know how many, what's the value, what's the revenue. There are all people who actually know what's going on there. In insurance, we need to wait a year. So, or well, actually, no.
Yep.
With those who go public, it's a little bit easier, especially with never mind. Okay,
We'll cover them next
time. And with this positive note, Adam, thank you very, very much for joining me today in this beautiful hotel.
Thank you for having me. Appreciate it. It's been a lot of fun.
Cheers, man. Have a good one.
Thanks for rolling with me.